morning. Morning, everyone. Welcome back to Morning Cuppa 8. Happy to see you guys back again. All right. So let's start with the Wall Street. All right. So the Wall Street saw a phenomenal turnaround during the Thursday session with the S&P 500 aggressively bearing its recent tech-driven losses to finish directly on top of the psychological 7,500 points level. So investors are now looking back into the equities after the recent peace deals are official. So to me, this will somehow dissolve the risk premium, and also for the equity and indices, we may see that it may charge higher in the coming session ahead with the influx of the risk on sentiment. Right. So if you look at the China A50 futures yesterday, so right, well, it went up by 0.96%, which managed to stay above the 15,500 level during the session. So standing in contrast to the broader cautiousness with the we are seeing that across the major Asian indices as well. So I believe that this move is largely being driven by the domestic sentiment, while the rest of the region has been under pressure due to the US Fed latest hawkish signal. The A50 future has found support through a narrative of the internal policy expectation. So technical wise, right, we still see that the move is in a big sideways movement or consolidation. However, it's still hovering around the 15,500 level at this juncture, right? If you look at the WTI crude oil futures, well, it settled slightly lower at $76 barrel on Thursday after touching the 15-week low of $73 during the intraday trade yesterday. So yeah, the sharp drop to this level was triggered by supply side relief following the peace agreement that officially lifted the blockade of Strait of Hormuz again. However, the price staged a notable intraday rebound as it hit the 200-day moving average recently, where the long-term technical buyers also stepped in alongside with the persistent structural losses and also supply risk from the drone attack recently. Technical wise, we are still eyeing for the downtrend, targeting for the 70 US dollar per barrel after it breached the 200-day SMA lines. So looking into our Malaysia market, the KLCI ended the Thursday's session marginally higher by 1.4 points to close at 1711. Points, pairing a substantial intraday rally that earlier pushed the index past the 1720 level. So this late afternoon pullback yesterday, driven by widespread profit taking and also a narrative market breadth of around 678 decliners to 493 gainers, directly caused the FK Life futures market to settle slightly lower as it priced in the fading momentum of the underlying spot index. Right. So if you see here, the benchmark index opened with the strong upward momentum, surging past the 1720 mark in the earlier trade, lifted by the continued bargain hunting in the selected consumer heavyweights and also resilient blue chips counters, right? However, the market failed to sustain these heights or its high intraday, right? As the afternoon progressed, the widespread profit taking emerged, causing the KLCI KLCI surrender nearly all of its intraday gain yesterday, right? And now, if you look at the FKLI, the index futures form a dodgy candlestick yesterday after the recent gains. I believe this is only a minor pullback due to the profit taking, and for FKLI traders, we are targeting for the 1760 points for now. And yeah, if you recall that recently I always share to you that you should focus on the defensive stocks, right? And congrats to board. And as you can see here, 99 speed might pop up higher yesterday, testing our first resistance at 360 cent level. Now, if you believe the consumer stock to remain in play, we can now for the trend and target for the next leg charging higher towards 300 380 cent level. Um, Also, if you can follow the recent consumer movement, you should also be looking at the QL resources. We recently published, I mean, we got published this counter in our trading technical report. And now, if you see the stock is moving higher to test the first resistance at 3.90 ringgit, followed by 4 ringgit and level. And if you notice, right, the counter has now moved above the 50-day SMA line, which tells us that the trend is shifting to a bullish structure. Now, if you look at our Malaysia trading stocks, today we have Mr. DIY. So the stock is on its breakout formation higher at 1 ringgit and 65 cent level on strong. So with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at 1 ringgit and 75 cent, followed by 1 ringgit and 90 cent level. So if the stock to clear the 1 ringgit and 50 cent support, I believe this could reverse the course, and it may trend lower together below the 21-day moving average line as well. Right. So next we have Hong Leong Industries. So the stock is experiencing a breakout as well at the 19 ringgit level. So if the stock to remains bullish, we expect the price to reach the 20 and 10 cent in the coming session ahead, together with a high volume. Second resistance is at 21 ringgit 20 cent level. And also do keep an eye at the 1790 level for any attempt of reversal. So keep an eye on these two stocks, which is Mr. DIY and also Hong Leong Industries, as we got two breakout stocks for today, right? And lastly, for the FCPO, right? The slight decline you saw yesterday was primarily a reflection of a weak Q from the rival global edible market. I think overnight trading saw Chicago board of trade soybean oil futures drop nearly 1%, while the Dalian Commodity Exchange saw its active palm oil contract, contract by over 1.5%. So we believe, because of palm oil heavily competes for a share of the global food and also biofuel sector, this broad weakness in the pure veg oils naturally drag on the FCPO sentiment as well. But I think the overall movement remains point towards the downside, with stop loss hold at 4,700 level, and we are aiming for the commodity to charge lower towards for 390 level for 390 level, and also 4,300 ringgit level, right? So yeah, that's all from me, and I pass the floor to the next presenter. Thanks everyone, and happy trading.
Thank you, Aiman. Good morning. This is Vanessa from the Warrants team. All right. So there are actually 17 warrants that's expiring next month, not this month, but next month. So the remaining trading days for all these warrants are left with 37 days lah, starting from today. Okay, so these are the names. So if you have any of these warrants in your portfolio, it will be great that you can actually review, and a rebalancing could be uh, is actually suggested. All right, so for example, J C12 Park CP, and this page I would say there are actually more warrants that it was actually high in demand. For example, Top Glove C50, Yinsen C55, and Press Metal P Metal C2K. So some of these warrants are actually uh, I would say it was quite popular. So maybe you actually have some in your portfolios. So it will be great that you can actually review on it, because there's actually a few things that I will need your attention to. All right. So for example, bullish investors on Top Glove as the net profit just doubled and so forth. All right. So if you are still bullish on Top Glove and you would like to have a little bit of Top Glove core warrants in your portfolio, Top Glove C50 is actually one of the options, but whether or not it is actually the best, then you actually have to check on a few things. All right, the sensitivity is fine at 2.5 ticks, which is very responsive, but while the effective gearing is giving you about 6.4 times. So in terms of balancing between good sensitivity and good effective gearing, and expiring warrants can actually give you that. However, there's another thing that you need to know is that there's this thing called the time value of warrants. So we normally call it time decay lah. So for example, if you are buying, you invested in a warrant like 2 months ago or 3 months ago, that time, the time value of these warrants is still, there's a lot of value in this warrant. But then you bought the warrant and then you hold it, and it actually getting closer to the expiry date. And then this is what we call time decay, when the time value will get lesser and lesser day by day. All right. So how do you actually look at the data? If you're going on the RHB warrant website, for example, you search on Top Glove C50 to invest and all. And then if you click on this brown thing, you will be able to see all the data about these warrants. And there's this thing called theta. Theta, we actually use, sorry, it's a bit off. We actually use Ringgit Malay RM. That why so? Because this actually means that 1 day time decay for Top Glove C50. So provided that there's no changes in the mother share, like for example, yesterday, today, tomorrow, also the same price, but the warrant could drop in the value, like the bid price of warrant could drop. That is because of theta. So this every day it will drop by this number. Sometimes it will increase, sometimes it will decrease. It depends on the moneyness and also the time remaining to trade. So this theta will be very important for you. So back to the point that if you are bullish on Top Glove and Top Glove C50 is your choice, it will be great that if you are doing it for day trading instead of holding it for a few days. Yeah, so this is what we call the time decay, and also this will definitely erode to your warrant price. All right, so this is one thing for you to know that when warrants are approaching the expiry date. Right. So now you actually have to look for something that you have to rebalance some of your warrants into something that is newer. And for example, Top Glove C50 is expiring very soon, then you actually have to look for a newer alternative. So but Skyship, however, is actually new because there's no Skyship core warrants before. And we actually have 3 Skyship core warrants in the market currently. And if you're still bullish on it, then Skyship CG and Skyship CH will be two of the better options compared to the first one, because it's still quite deep in the money with the exercise price of 4.80 ringgit. So CG with 2.55 ringgit, and also CH at 3.30 ringgit. So one is in the money, another one is out of the money. And looking at the specifications like the sensitivity and effective gearing, if you want it to be more responsive, CG will be the one. While if you want it to have a better effective gearing, like 4.2 times, right? But you have more time to wait, you bersabar sangat, right, then you can actually go for Skyship page. All right, so if you have any question, call us on this number. So with this, I will pass the floor to Adam. Thank you.
All right. Thank you, Vanessa. So morning, everyone. So today we have a results review on Binastra Corporation, which released its first quarter 2027 results, where core profit rose by 40% year on year to reach 35 million ringgit. And this 35 million ringgit core profit for the first quarter of 2027 met 21 and 20% of hours and street estimates, which we deem to be in light of better quarters ahead. So the main reason for the increase in the profit was due to ongoing projects, with a mixture of residential along with data centers and even some large-scale solar projects. But one thing to bear in mind, net margins was at about 5.8% in first quarter of 2027 compared to about 9.8% a year ago. And this was due to a particular M&E fit-out projects, which was worth 200 million ringgit that was completed within the quarter. And that particular project had very low margins of around 2%. So that was the main reason. And, notwithstanding what I've just mentioned, we take comfort from the fact that management shared that, building material prices have recently showed, some signs of easing. For example, the price of industrial diesel has reached about 393 ringgit per litre compared to the peak in mid-April where it was around 8 ringgit. So moving forward, we do see building material price trends to be very manageable. Aside from that, looking ahead, Binastra expects to win maybe one or two more data center projects, and they are continuing to be very aggressive in this space. So all in, we make no changes to our earnings estimates, given that the latest earnings were in line with our expectations. But we do roll forward our valuation based to FY28 from FY27. So therefore, we derive a new target price of 3 ringgit at 10 cents from 2 ringgit at 72 cents previously. So that's about it for Binastra. I'll pass on the floor to the next speaker. Thank you.
Okay, thanks, Aiman. Moving on to Ecoworld's results. Note, second quarter FY26 numbers are in line with expectations. The quarter-on-quarter drop in revenue and earnings was largely due to the strong contribution from the completion of the disposal of two land parcels. The first one is the land at EPP 1 to Microsoft, and the second parcel is the EPP 5 in Egypt to Corp Computing. So these two transactions were recognized in the previous quarter. So during the quarter, EBIT margin was higher, largely due to the realization of cost savings arising from several completed phases and industrial land sales. A 2-cent second interim dividend was declared, bringing first half dividend to 4 cents. So on a full year basis, we're expecting 8 cents in total. Net gearing inched up slightly to 0.25 times from 0.2 times in the previous quarter. In terms of sales, property sales are pretty strong. 7-month sales totaled 3.28 billion, representing 82% of the sales target of 4 billion. Southern region is the highest contributor, 51% to total sales, and then industrial segment contributed 35% to the total, followed by township projects 36%. Followed by township projects 36. So industrial is 35%, township projects is 36% to total sales. And for township, Eco Botanic Tree is the strongest township contributor, raking in 490 million in sales. As for the industrial segment, EPP 7 in the Greece and Milan, raking sales of almost 800 million during this 7-month period. The project was launched in November last year, and the demand has been overwhelming So far the launches include cluster semi-D factories as well as 1 to 5 acre industrial plots. Then in view of the pipeline launches, we think EcoWorld is very likely to exceed the sales target again this year. So the recent launch of Chateau 2 in Eco Botanic in Iskandar, Malaysia was well received. The semi-D and the bungalow lots, the non-Bumi units are all fully sold. The semi-D is priced at around 2 million, while the bungalow, there are 4 and 6 million types. Management also indicated that as soon as the Middle East geopolitical tension stabilizes, its new Eco Radiance Township in Semenyih will also be put into the market. And the company will also launch its weekend project, which is the high-rise residential project in Lakin, a JV with J-Land. So GDV for this project is worth about 1 billion. So this should be rolled out by end of the year. Future revenue to be recognized is at all-time high, 5.38 billion, and it was largely boosted by the recent land sale to AirTrunk, which is worth 281 million. That was announced, I think, 1 or 2 months ago. So, all this DC land sale, there will be another 500 million DC land sales to be recognized by end of FY26, whereas the recent AirTrunk land sale will be recognized by first half FY27. So which means that the earnings momentum will be pretty strong for FY26 and 27. So we maintain our buy rating for the stock. Target price is unchanged at 2.78 ringgit. That's all from me, and thanks for following us at our morning kappa at 8, and hope to see you all again on next Monday, same time. Thank you so much.